Our next guest says now is a stock picker's market, and he's using earnings revisions to find names he likes the most. Let's bring in Michael Kantrowitz. He's chief investment strategist with Cornerstone Macro. Michael, it's good to see you. Earnings revisions.
Yeah.
Tell
earnings
me about
revisions.
that.
So we are at the point in the market cycle where investors get very focused on earnings. We've had the last 15 months, 18 months, a huge rising tide of good macro data where really every company has seen a big benefit. And now we're at the point, some are calling it peak macro, where the bigger story, things are stabilizing. And so the question today is that which companies can pull away from the pack and see positive earnings revisions as the macro backdrop's really not getting much better from here. And so this is pretty classic for a normal cycle. And we've seen that work really well. That is picking stocks with positive earnings momentum across sectors, not just in one sector. It's worked really well since March, since bond yields peaked and markets began to get pretty volatile. Yeah,
so in other words, the early stages kind of, lifts all boats, and now you have to get more specific. You have 50 different stocks here. Let me just mention a couple of them. The NASDAQ itself, HPQ, Raymond James, Google. So, this is a pretty eclectic group.
Yeah. Yeah, so when we're doing stock selection based off of quantitative analysis, it's always very sector neutral. And so we're looking for attributes across industries and sectors that investors are looking for. Typically, investors do look for similar attributes, whether it's a financial company or a tech company or a staples company. And so it makes sense to really broaden out and diversify the portfolio in terms of sector exposure. And simply what we're looking for is growth at a reasonable price that also has near-term earnings momentum and fairly moderate betas. Not too risky, not too defensive.